Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 17th of October. I'm Daniel Lam, your host for the podcast. Last Wednesday, we talked about the possibility of oil supply disruption, as well as the implications on crude oil and energy stocks. Digging deeper, potentially higher oil prices is likely to be bad news for emerging markets. So year to date, MSCI EM is already behind MSCI DM by over 11%. Furthermore, EM FX, excluding those in Latin America, is down across the board against the US dollar. The FOMC's high for longer policy has put many EM central banks in a tough situation. So they may choose between A, cutting rates to support growth, but risk further currency depreciation and then getting high imported inflation, or B, keeping rates stable but watching the economy worsen. And this specter of energy-driven inflation would exacerbate the policy dilemma for EM monetary authorities. In particular, potential increase in oil prices would be most difficult for Asia because most of the Asian economies are oil exporters. For example, Korea and Thailand have the region's largest negative net fuel balances as a percentage of GDP. And in many of the economies, energy and food make up a large percentage of the CPI baskets. Of course, on top of all these for EM, the enthusiasm on the most recent news regarding Chinese stimulus has been relatively short-lived. The Hang Seng Index remains in a downtrend, and the most recent rebound failed to break the previous resistance at 18,373, and the index has given up half the gain since the most recent rebound. And we continue to believe that a coordinated and large-scale stimulus is the only way to lead to a sustained rally in Hong Kong-China equities. Our preference on equity regions continue to be Japan and the US. Japan, because of its improving corporate governance and relatively cheap valuation, and the US, because of the solid performance and strong story in its growth sectors. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.